Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin tests critical $60,000 support following blowout jobs data, while a massive Zcash vulnerability discovered by artificial intelligence sparks supply integrity concerns across the crypto market. Bitcoin is currently trading around $60,526 after falling below this key psychological level for the first time since October. The decline intensified Friday, following a stronger-than-expected May employment report showing 172,000 jobs added, nearly double economist forecasts. The unemployment rate held steady at 4.3%. Markets reacted hawkishly to the data, with traders now pricing in Federal Reserve rate hikes rather than the anticipated cuts. This shift pushed 10-year Treasury yields to 4.52% and triggered significant sell-offs across risk assets. The broader crypto market experienced its worst week since July 2024. Ethereum dropped 21.6% weekly to around $1,546, while Solana fell 23.7%. Over $1.6 billion in positions were liquidated across the market in just 24 hours, with long positions bearing the brunt of forced selling. A critical event shaking market confidence involves Zcash, where a 4-year-old vulnerability was discovered using Anthropic's Claude Opus 4.8 artificial intelligence model. Security researcher Taylor Hornby found the flaw on May 29th in Zcash's Orchard shielded pool. The vulnerability could have allowed attackers to mint unlimited counterfeit tokens completely undetected. Zcash crashed over 40% following the disclosure, falling from around $635 to $368 currently. Because of Zcash's privacy features, developers cannot cryptographically prove whether the bug was exploited during the 4 years it existed. This incident marks the first major demonstration of advanced artificial intelligence discovering critical zero-day vulnerabilities in cryptocurrency protocols, raising urgent questions about all blockchain networks. Institutional flows remained negative, with spot Bitcoin exchange-traded funds experiencing 13 consecutive days of outflows, totaling approximately $4.4 billion since May 14th. The outflow streak ended Thursday, with just $3 million in inflows before resuming pressure Friday. Michael Saylor's strategy sold 32 Bitcoin for $2.5 million, marking the company's first sale in 4 years and symbolically challenging the permanent Bitcoin accumulation narrative. On the regulatory front, the Clarity Act faces scheduling constraints in the Senate. Galaxy Research downgraded passage probability from 75% to 60%, citing competing legislative priorities consuming floor time. Senator Angela Alsobrooks indicated she will not support a floor vote until negotiators resolve outstanding ethics provisions and illicit finance language. Market sentiment indicators show extreme fear, with the Crypto Fear and Greed Index dropping to 13. Bitcoin sentiment reached peak bearishness at recent lows, historically a contrarian indicator. Analysts identify the $59,000 to $60,000 zone as critical support, with potential deeper targets at $54,000 if current levels fail. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.